December 2008. The most trusted man on Wall Street has a secret. He's broke. Not having a bad quarter broke. Not the market's down broke. Completely, catastrophically, there is no money broke. His name is Bernie Madoff, and for decades, he's been the safest bet in finance. A former chairman of the NASDAQ stock exchange, a man whose investment fund didn't just beat the market, it beat it smoothly, calmly, year after year, in good times and bad, like a machine that never missed. The wealthy begged to get in. Charities, celebrities, entire pension funds handed him their money and slept easy. On paper, he's managing $65 billion. In his actual bank account, there is $300 million. And his clients have just asked for $1.5 billion back. The math isn't close. It isn't even in the same universe. On December 3rd, Madoff pulls aside one of his most trusted employees, a man named Frank DePascali, and says 4 words that should have been impossible from the mouth of a Wall Street legend. I'm out of money. Because here's the truth that's about to detonate across the world. Bernie Madoff wasn't a bad investor. He wasn't unlucky. For decades, he wasn't investing at all. The entire thing was a lie. The biggest one in the history of money. To understand the lie, you have to understand the machine underneath it. And it's older than Wall Street itself. It's called a Ponzi scheme, named after Charles Ponzi, who ran a famous one in the 1920s. But the idea is ancient, and it's brutally simple. You promise people high returns on their investment. When the first investors hand you their money, you don't actually invest it in anything. You just keep it. Then, when they ask for their profits, you pay them, using money from the next batch of investors who just signed up. The first people get paid. They're thrilled. They tell their friends. More money floods in, and you use that to pay the earlier ones who want to cash out. Round and round it goes. Every profit is just someone else's deposit, quietly handed sideways. Nothing is ever actually earned. Nothing is ever invested. It's a bucket with a hole in the bottom, and the only thing keeping it full is a constant flood of new water pouring in the top. Which means a Ponzi scheme has one fatal mathematical certainty built into it from day one. It must grow forever. The moment new money slows down, or too many people ask to cash out at once, the whole thing collapses instantly. Madoff knew this. He'd known it for decades, and he'd kept the water flowing longer than anyone in history. Now, about that $65 billion. Because this is where almost everyone gets the story wrong. When you hear Madoff stole $65 billion, you picture a vault somewhere with $65 billion in it that he pocketed. That's not what happened. And the truth is stranger. There were 2 numbers, and the gap between them is the entire crime. The first number is real. Over the decades, actual people handed Madoff actual cash, roughly $18 billion of real, hard-earned money. Retirees, charities, university endowments, that money was real, and most of it was gone. The second number, the $65 billion, was fiction, pure invention. It was the total that appeared on his clients' account statements, the balance they thought they had. Because remember, Madoff wasn't investing, so every month he simply made up the profits. He printed statements showing steady, beautiful gains that never happened. A client who deposited $1 million might open their statement a few years later and see 2. That extra million? It didn't exist. It was a number typed onto paper. Multiply that fantasy across thousands of clients over 30 years, and you get $65 billion of wealth that was never there at all. So Madoff didn't steal $65 billion. He stole 18 and invented the other 47. He wasn't just running a fraud. He was printing his own imaginary money. Here's the question that haunts this entire story. How How does one man fake $65 billion for 30 years without a single regulator catching him? The answer isn't that he was a genius hacker. It's something far more uncomfortable. He was trusted. Bernie Madoff wasn't a shady figure lurking in the shadows. He was Wall Street royalty. A former chairman of the NASDAQ, one of the biggest stock exchanges on Earth. He sat on boards. He advised regulators. When Bernie Madoff told you your money was safe, questioning him felt almost absurd, like doubting the bank itself. And his results were hypnotic, not flashy, impossible, too good to be true returns, just steady ones. Calm, consistent gains year after year, whether the market soared or crashed. To ordinary investors, that looked like genius. To anyone who understood markets, it should have looked like what it was: impossible. Real investing is never that smooth. One man saw it. A financial investigator named Harry Markopoulos did the math in less than an hour and concluded Madoff had to be a fraud. He warned the SEC repeatedly for years. He handed them a detailed roadmap. They didn't act. As one author later put it, the lie was simply too large to fit inside the agency's imagination. Nobody could believe a man that respected, that important, could be a criminal on that scale. His reputation wasn't his cover story. It was the scheme. For decades, the water kept flowing. New investors, new money, enough to pay whoever wanted out. The machine survived recessions. It survived crashes. It survived every crisis Wall Street threw at it. And then came 2008. When the global financial crisis hit, everything changed. Markets collapsed. Panicked investors everywhere scrambled to pull their money out of everything, including Madoff. Suddenly, instead of new cash flooding in, he faced a wave of people demanding their money back. Around $7 billion in withdrawal requests. There was no $7 billion. There never had been. The flood at the top of the bucket had finally, fatally, slowed. And the hole at the bottom was all that was left. On December 10, 2008, Madoff held his firm's annual Christmas party. He'd just announced he was handing out bonuses early, millions of dollars, months ahead of schedule. It made no sense with the markets in freefall, and his two sons, Mark and Andrew, who worked at the firm, finally confronted him. Where is this money coming from? He told them to come to the apartment, and there he confessed. The business, he said, was one big lie, a giant Ponzi scheme. His wife's first stunned question was simply, "What's a Ponzi scheme?" The sons called a lawyer that night. The lawyer called the authorities. And the next morning, December 11th, 2008, the FBI arrested Bernie Madoff in his Manhattan apartment. The collapse was total. On March 12, 2009, Bernie Madoff pleaded guilty to 11 felony counts. That June, a judge sentenced him to 150 years in prison, the maximum possible. He died behind bars in 2021 at 82. But the sentence was never the real story. The real story is what the lie left behind. Thousands of ordinary people, retirees, teachers, small charities, went to bed comfortable and woke up with nothing. Life savings gone. Foundations that funded real good in the world erased overnight. And the damage reached deep into Madoff's own family in ways that were quiet and permanent and genuinely tragic. This was not a victimless, clever trick. Real people paid, and some of them paid everything. So what's the lesson buried in the biggest fraud in history? It's the same thread that runs under every story on this channel. Madoff's fortune was never real. It was a number typed onto paper, believed because the man behind it was trusted. And that should sound familiar, because the money in your own account is also, in the end, a number backed by belief. The difference, the only difference, is that the system behind your money is real and audited and accountable. Madoff's was one man and a printer and a promise. His entire empire ran on a single thing: trust. And the moment people looked closely, There was nothing underneath it at all. Which leaves one last question worth sitting with. How much of what you call wealth have you ever actually seen? If this story got you thinking, like, share, and subscribe to Curious Black. I'll see you next time.